What's up, apes? Welcome back to the Daily Peels video stream of the day. We got a lot to talk about here today, but let's go ahead and make this a quick one, or let's see how quickly we can do it. With me and my yapping skills, we know that that's going to be a challenge to keep it under 74 hours, but still, we're going to try our absolute hardest here. So, it is currently 6:51 p.m. on this beautiful Wednesday, June 26th, 2024, and we are talking everything markets, getting you ready for the ticker tape here on Thursday. So make sure to stay tuned to the end to hear what kind of legal trouble Apple is facing overseas, as well as to hear about all the different stocks that are moving here today. We got a lot of movement going on in the electric vehicle sector and some very weak earnings reports that we're definitely going to want to go over. And we'll say a prayer for anybody who was unfortunate enough to be holding shares today on Wednesday, probably tomorrow for when most of you are going to be watching this or listening to this if you're listening to the podcast version. But of course, we're also going to be talking about the housing market. We got a new residential sales report for the United States, but that's going to be kind of put on the back burner because we have more important housing news to be talking about. Before we get into all that, the WSO Alpha portfolio, we were up about 52 basis points for the session here today. Honestly, very good day for us. We outperformed both the S&P and the NASDAQ. Big reason for that was because of our overweighting performance or our overweighting position, I should say, in Tesla. So we have much more of the portfolio allocated to Tesla, and the stock absolutely ripped for the session for reasons we will talk about in just a minute or so. We also saw some outperformance from companies like Zillow, like Snowflake, and some of our more recent purchases. So of course, make sure to sign up for WSO Alpha. You can do that at wallstreetoasis.com/alpha. Follow along with our trade tracker. Stay tuned with all of our research, which we should have a new report coming out later this week. All right, let's go ahead and get into some of the banana bits for the session. Global funds, they are buying up India in size. It is easily the most purchased company over the past couple of weeks and probably all throughout 2024, but I don't have that data, unfortunately. So they're buying up India like the British Empire did in the 1800s, just with a lot less, slavery, general human rights violations and atrocities committed than the British Empire is known for. But still, it's been working out well for India. If you look at INDA, this is the MSCI India ETF. It basically is like the SP 500 for India, or at least BlackRock's replication of such an index. Go ahead and check out all that stuff if you want to stay tuned with the most populous country in the entire world. All right, and then speaking of why Tesla is up for the session, they went ahead and figured they might as well fix problems that are all too well known. A lot of the time when companies do recalls for cars, they're just identifying problems that are known, but Tesla came out yesterday and announced recalls on the Cybertruck for problems that were already far too well known. So the market is just glad to see that the company is doing something about it. I personally think the Cybertruck looks sick. Like, I cannot wait to get my hands on one of those bad boys. I just drove by one the other day, and I was like, damn, I wish that I was that cool. Either way, I mean, the Cybertruck, it's been memed into oblivion, but you know what? It's getting recalled right now, so expect many more memes to be coming with that, maybe even some from Elon himself. We know that he is the ultimate troll and also the richest man on Earth, which is quite the dichotomy, and, definitely a guy I would love to introduce to any alien civilization that was unfortunate enough to come and invade us, but still, that's the situation that Tesla is facing right now. Meanwhile, Interactive Brokers, they are launching their own version of a betting market, or I should say a prediction market. So kind of like Kalshi and like Polymarket have had, these are events that you could bet on, like the next Fed move, or, how long Taylor Swift's album is going to stay at the top of the Billboard 100, or whatever else, anything like that, you can now bet on live on Interactive Brokers. So very interesting to see them getting more involved in the degenerate gambling space. If you want to be even more degenerate, go to Interactive Brokers. Finally, Whirlpool. This is a big appliance maker of things like washers, dryers, refrigerators, stoves, microwaves, other appliances like that. They are going to be getting acquired by the German company Bosch. This is named after Robert Bosch, who founded the company back in the middle of the 18th century. He was boys with, did you guys know Mercedes-Benz? The last name Benz is the guy who invented the car. I forget his first name. He was another German fella, alive at roughly the same time as Mr. Bosch here. And so I can only assume that they were absolute homies. So I'm sure he is proud that Bosch is going to be buying Whirlpool, this American appliances giant. Both companies said they wouldn't comment on the rumors for now, but we all know what that means, that they're definitely going to be getting acquired over the next couple of days. And Whirlpool stock confirms that because shares were up in the high 20% here today. All right, let's move on into our big story for the day here. And that is all about how Americans need to stop complaining. Now, remember, guys, it always could be worse, but also keep in mind that if you say the sentence, it could be worse to anybody, you've just increased your odds of getting punched in the face by at least 1,000%. So be careful with that kind of stuff, but I'm going to be saying it here today. The United States housing market is completely fucked, but as usual with most things in the US, we are still doing a hell of a lot better than the rest of the world. So let's go ahead and dive into exactly what the hell I'm talking about here. If you want to take a gander at this chart right here, I know you can't read it whatsoever. This is the kind of chart that would make the likes of fucking Stevie Wonder throw up if he saw it. So, it's really disgusting. It's very hard to read, but essentially, this is the Organization for Economic Cooperation and Development, the OECD. They are ranking housing markets around the world from best to worst. They're qualifying this against three factors being affordability, size, and quality. They're doing it in a weird way that we'll get into in just a second, but basically what we see is that the United States is on top, followed very closely by Australia, Norway, Canada, Belgium, Netherlands, Korea, Ireland, Luxembourg, a bunch of other countries like that. Down here towards the bottom of the list, we have South Africa, the Slovak Republic, Mexico, Colombia, Latvia, Russian Federation, Brazil, Portugal, a bunch of other countries in between. So as far as I know, there are 38 member nations of the OECD. They went ahead and analyzed 41 of these countries. So apparently 3 that aren't in the OECD that got the invitation to the dinner party anyway, but the United States still came out on top. So let's go ahead and look at the first metric that they were looking at, and that is, of course, quality. And now, when I say quality, don't start thinking about like the build quality of these homes or how long they'll last or anything like that. They are measuring quality based on private access to what they call basic needs. Things like toilets, clean water, semi-automatic firearms, especially here in the United States. So obviously we came out on top, and 99.91% of dwellings containing private access to things like toilets, clean water, and all that, what they call basic facilities. As you can see right on here, we came out first, which is a little bit weird because we're 99.91%. But if you click the links in the edition and you go and like drag your mouse over these blocks that you'll find in that link, you'll see that it says countries like Sweden, Norway, Switzerland. It's basically Switzerland and the Scandinavian countries are all at 100%. I don't understand how that means that the United States comes out on top, but that's what they reported, so we're going to go ahead and stick by it. Who am I to question the OECD? But if we go ahead and look at the next metric, this is size of houses. I thought we ran away with this. I figured we would be number 1, but no, the United States is number 2 in terms of housing size. We are actually tied with New Zealand based on the way that the OECD decided to measure this. They're essentially quantifying rooms per person. So they're dividing the number of rooms in a house by the number of people in the house. And what we see is that the United States is at 2.4. We average 2.4 rooms in a house for any given person. So it's, basically you can be in 2 rooms at once and still be alone. When you send somebody, like parents sending their child to their room, there's a lot more freedom to do that here in the United States, but the most freedom with rooms in a house is actually up in Canada. I didn't think that I would say Canada and most freedom in the same sentence ever in my entire life, but they are at 2.6 homes per person. The US is tied with New Zealand at 2.4 in second place once again. And then if we go ahead and look at our third metric here, what they are measuring is affordability. So obviously the United States isn't anywhere close to the top. Well, they're actually kind of close, which is extremely surprising if you ask me. But basically the way that they're quantifying this is percentage of average income that goes to shelter costs. And Korea is leading the way with 14.7% of their incomes going to paying for housing. All the way down at the bottom of the list, we have Slovakia, or the Slovak Republic as it's apparently called, paying about 27.3% of their total incomes on housing. The United States at number 9 is at 18.3%. So no matter how bad it gets, it could always be worse. And seems like it's going to be getting better going forward, because at the same time, we also got this data here today. I thought the chart was going to come up right there, but no, it didn't. We got this data here today. There's my chart. This is clocking new residential sales. So sales of new construction residential units here in the United States, not existing homes. These are brand new builds, and it fell off a fucking cliff last month. Not really last month, because, obviously this stuff takes a bunch of time to actually be quantifying, but the May data fell off. New home sales were down 11.3% compared to April of this year, and down 16.5% compared to May of last year. Absolutely disgusting to see housing turnover remaining that low, but the good news is that the median sale price of a new home actually declined as well. It fell by 0.9% for the month to $417,400. That's chump change. I got that in my back pocket, as I'm sure most of you out there do right now. What color is your Bugatti, by the way? Anyway, it's a promising sign for home buyers to see that the market is kind of starting to shift in their favor. I don't know why home buyers aren't building up houses like there's no tomorrow, because there's unlimited demand at extremely high rates for it right now. But either way, the trauma from the GFC must still be lingering. So that's the situation that we're facing here in the United States. Let's go ahead and move right along into some of our big stock movers for this session. So the first one that we want to talk about here today is, of course, Rivian. This is the EV maker that is not Tesla. It's kind of like, if all these EV makers, like if they were like undergraduates about to graduate and looking to recruit for banking, Rivian is kind of like the one whose dad is an MD at Goldman or whose mom is an MD at Goldman. We're progressive here at the Peel. And it's like nothing that they do can ever go wrong, because you look at companies like Fisker, like Lucid, like all the dead ones of the past, they are falling apart, imploding on themselves, but everybody seems to like Rivian. They're like the cool kid, the valedictorian of the class. And that was confirmed on Wednesday by Volkswagen, or really on Tuesday when the announcement came through. Essentially, Rivian and Volkswagen are going to be engaging in a joint venture to launch a line of vehicles together in the later half of this decade. So it's going to be at least 2026 to 2030 that this stuff is going to start to get released. But essentially, Volkswagen can't figure out how to develop their own software, so they are investing $1 billion in Rivian to be able to do so, and up to $5 billion by the end of the contract terms. If Rivian is able to meet all of these demands, they're going to be launching those vehicles together. So I'm sure it's going to be pretty sick, but combining American-made cars in a German region. I don't know if most American cars will be able to fit down those rural streets and especially those city streets, so I guess we'll find out at this point. But either way, the stock was up big for the session, up over 24%, so good for you, Rivian. Next up, we have FedEx here, and I actually don't have the percentage written down for FedEx, so let me go ahead and take a look. But FedEx absolutely destroyed its earnings report. So just like they destroyed my packages, they killed it on earnings, but instead they decided to take a break from delivering packages here today, and they are instead delivering shareholder value of 15.51% for the session on this banger of an earnings report. They saw a lot of strength in their freight and ground units, a little bit of weakness in the express delivery, mostly due to weakness in international markets. See again, United States best in the world. Margins improved thanks to cost-cutting measures as well. It was really a masterclass of a report, especially if we compare it to their last report of 2023 when the stock was down basically the same percentage at the end of last year. All right, let's move into the what's rotten names. We, of course, have General Mills, one of the most boring companies in the entire world and one of the hardest ones to write about because it's so goddamn boring. But they were down 4.6% for the session here today. And this one was because of a bad earnings report. So General Mills, for those that don't know, they own a bunch of brands that you eat for breakfast that you probably shouldn't. I think they're like the leading donor of microplastics into everybody's bodies around the entire world. They make things like Cheerios, like Nature Valley, and a bunch of other shit like that. And effectively, they came out with an earnings report. They missed on sales. They managed to maintain earnings somehow, but it was a very tough quarter because food inflation remains extremely persistent, but it's getting much harder to pass that along to the consumer. So the company's getting a little bit squeezed. It still came out ahead on the bottom line, which is pretty impressive, not going to lie. But effectively, the big problem when it comes to the headlining sales number was consumers are shifting their sales mix. Everybody is kind of downsizing or moving to the lower cost brands. Instead of buying Wheaties and Cheerios, they're moving on down to Rice Chex and whatever other bullshit, we ate for breakfast growing up. And so obviously that's going to be hurting their margins, but not enough for them to miss estimates. Still, that didn't give the market a whole lot of confidence going forward. Our final mover of the day, we have Paychex. This is a payroll and HR provider. It's kind of like ADP's little brother. And the stock is down 6.1% for the session because they also came out with an earnings report. They beat on the top and the bottom line, but their next couple of quarters are looking absolutely terrible. They're looking worse than Julian Assange's life is going to be looking going forward, even though he's a free man now. I definitely wouldn't want to trade places with him, but either way, that's kind of how Paychex is looking. They said that weakness in hiring among small and medium businesses is causing them to reduce their expectations going forward. So once again, the stock was down 6.1% for the session. All right, our final story of the day here. We were talking about Apple versus the world. We were actually going to talk about this earlier this week, and then on-cycle PE recruiting showed up, and we figured we should probably cover that because that's our entire fucking business. But Apple is still getting dicked down by the rest of the world right now, or at least by Europe for the time being. So for those of you that don't know, Europe is a continent. It is in between the Atlantic Ocean and Asia and north of Africa. You all know what Europe is. The European Union, this is kind of like the governing body for most countries in Europe. notably not England and not some other players like Switzerland and other ones that are fucking around out there. But essentially, the Eurozone enacted a law. This is enforced by the European Commission called the Digital Markets Act. This is a way to go ahead and try to regulate these big tech companies on an antitrust basis. The United States absolutely cannot do it, probably because in the United States, our legislator is made up of geriatrics who have no fucking idea what Bluetooth or PDF files are. Europe, it isn't much better, but it's definitely better than it is here in the United States. So, the Digital Markets Act was enacted in September of 2022. It went into effect in its current form in March of this year, and Apple has already violated it. And so, the EU is coming at them hard right now. Basically, the allegations are that Apple's restrictions on the App Store. So, basically, they're saying that Apple does not provide developers a way to interact directly with their consumers, and as such, there is no way for consumers to explore cheaper alternatives to the same services that they're getting. So, think about, like, go ahead and try to buy an audiobook on an iPhone right now, on Spotify. Like, if you open up Spotify, you'll see the audiobooks, but you can't purchase them in the app. And that's because Spotify said, fuck you to Apple, and they're not allowing that because Apple is going to take 30% off the top and just completely destroy Spotify's margin. So what Apple does now is it reroutes to, like, a web interface instead of being on the App Store so that Spotify can keep all of your money. And that's basically what's going on. So the EU is saying that Apple hasn't made it conducive enough for developers and users to be able to interact with each other and explore the cheapest options possible going forward. So Apple says that this is for security reasons. They don't want developers interacting with users because they want that Apple layer in between as kind of a consumer protection lens. But that's the big story here that's going on. Now, the interesting thing, however, is the potential fine that Apple could be facing if they are found to be guilty in this case. So what we're looking at here is a chart of the largest fines ever paid in the history of corporate anything. So at the top of the list, it's a company that we were actually just talking about, and that is Volkswagen. For Dieselgate back a couple of years ago, they ended up paying $30 billion in total fines. Next up, we have BP for destroying the entire Gulf of Mexico and killing every duck in existence based on these fucking Dawn commercials that everybody sees. They paid $20.8 billion in fines for that. I mean, Bank of America at $16.65 billion, JP Morgan Chase at $13 billion, and finally Purdue Pharma at $8.3 billion. Now, the banks, that was largely related to fraud and other scumbaggery that we're used to from them, and Purdue Pharma was for addicting the youth of America to drugs that absolutely destroyed and ruined their lives. I don't know how that fine wasn't 100 times what it actually came in to be, but nonetheless, Apple is going to be dominating these fines if it is found to be guilty right here. Personally, I think it's a lot worse to be addicting an entire country to OxyContin as opposed to not allowing fucking developers to interact with users on their app stores. But I digress. That is the current legislation, and it's what we've elected or what we've decided in this democracy. So Apple, if they are found guilty under the current terms of the Digital Markets Act, or the DMA, they could be paying up to 10% of their total global revenue. And in 2023 for Apple, that was upwards of $394 billion. So if this fine was levied at the end of 2023, that would translate to a $39.4 billion fine, 30% higher than the next highest being Volkswagen, and setting a new record for Apple once again. Congratulations to Apple in advance on setting yet another world record for the largest something ever. Props to them. I'm sure they're super proud. But Tim Cook and the rest of the gang, they got like $70 billion worth of cash and marketable securities on their balance sheet right now. So something tells me they are not too worried about this legislation. Anyway, that about does it for us here today, guys, at the Daily Bugle Global headquarters. Thank you for tuning in once again. It is now 7:09 p.m. Shout out to everybody on the podcast as well. I got to get better at walking through these charts, I think, because I know a lot of you are listening on the podcast, and so I'll try my best to do that going forward and kind of explain them a little bit more in-depthly. But like I said, that about does it for us here today. Happy investing, happy trading. Bye now.